Welcome back. We've looked at production numbers. It's now time to look at hiring numbers. And joining us is the big man from the hiring space, Hitesh Oberoi, Chief Executive Officer and Managing Director at Info Edge. Hitesh, good morning. Thank you very much for joining us. Have a great 2023. Good wishes from all of us here. But we have to begin by asking you the quarter that was. We heard that IT hiring has come to a standstill from one of your competitors. How was the experience at your end?
Firstly, a very happy New Year to you and all your viewers. So we are still not complaining. The hiring market continues to be good. You are absolutely right in saying that hiring for IT professionals has slowed down over the last couple of quarters. But that market had also gone berserk. I mean, most IT professionals got, 30-40% increase for a couple of years. Attrition rates are at an all-time high. Things are now going back to normal in IT. But the non-IT market continues to be red hot. There's a lot of action there. After a long time, things are opening up. There's revenge travel, revenge shopping, revenge tourism. So we are still not complaining. We are okay.
So those are the sectors who are hiring most: tourism, travel, hotels, hospitality. Which would be
almost all non-IT sectors. Almost all non-IT sectors. So the auto market is hot. The telecom market is hot after a long time. There's a lot of construction activity. Real estate is very, very solid. A lot of hiring in healthcare, services in general, banking, financial services, insurance. So almost all non-IT sectors are doing very well after a long time. They're certainly growing much faster than what they were growing at before COVID.
Okay.
But yes, the IT market has slowed down.
What about e-commerce and retail? Because, the industry participants indicate that the demand, especially in festive season in e-commerce and retail, was not as buoyant as one would have expected. How are the hiring trends there?
So, see, e-commerce is a little different because in general, there is the startup world has slowed down. People are taking corrective measures. Even e-commerce sites, I'm sure they've added, they become more expensive over time. People are charging for delivery. There are all kinds of other sort of things happening out there. So the internet scene, the IT hiring scene, the startup scene, there's a lot of pain there right now because of what you're seeing on the funding front. Funding has slowed down. It's not easy to get 20 million, 50 million, 100, $200 million checks anymore. All these companies are under pressure to sort of make money, to break even. So what you're seeing on there is a little different, but I'm sure on the offline world, things are a lot better than they were maybe 2 years ago or even 3 years ago before we went into COVID.
Okay.
Hitesh, just wanted to focus on IT and digital as a percentage of revenue. Is what, they're around 45-50% odd? I think you're,
Yeah, about 50%.
50% odd. All right.
Yeah.
But real estate, you're seeing some traction, is what you said. And your 99 acres, the billing is only 14% or thereabouts higher in comparison to pre-COVID levels. Could you explain that to us? And are you seeing any signs of slowdown in this rising interest rate scenario?
No, the real estate market continues to be buoyant. In fact, it's not been like this in a while. There is prices are going up. There's a lot more buying happening than earlier. Everybody wants to either rent or buy a bigger home. Affordability has gone up. Interest rates are reasonable. So we expect this market to continue for some time, unless, of course, things change on some of these fronts. Our business is also looking up. In the first half of this year, we grew at more than, I think, 40% over last year. Of course, there's a lot more competition in the online real estate space, and that may be impacting our pricing, in some places. But on the whole, we are seeing a lot more activity in this segment and in this sector than was the case. That has been the case for the last few years, in fact.
Okay.
Now, what we don't want is it to become too easy for developers and builders to sell real estate, because then we are not required.
Okay. But you'll make more than the 14% Nigel was referring to in terms of billing.
Well, see, we have some, like I said, in the first half of this year, we grew at more than that number. In the second half, a lot will depend on how we execute. Like I said, there is a lot more competition than was the case earlier in this segment. So, our growth rate should not be taken as should not be taken as a proxy of what's happening in the industry.
Sure. Okay. I want to come to the more important part that investors watch out, and this is not labor or employment related. how are you behaving as a financial investor? You know, what is the total amount of money you invested in startups now that you got perhaps a golden opportunity in 22? I mean, if you can give us a number.
So like all financial investors, we've also become cautious because of what's happening around us. But we were never in the 20 million, 50 million, $100 million check game. We were always early stage investors. We've always supported young companies. Our first check size has normally been less than a couple of $1 million. In that space, we continue to see a lot of action. There are many new entrepreneurs, there are many new opportunities, and there are enough people willing to back them. But at the same time, every financial investor needs to put aside some money to support their existing investments, because, like I said, it's everybody has some good companies in their portfolio which will need support, and this may not be the best market for them to go out and get money. So you need to sort of conserve your capital. You need to put aside some money for your existing investments, and then with the rest you do you make new investments. So market has slowed down a bit, but every time you have a slow market, it presents a lot of good opportunities, and we have to be sort of willing to grab them.
That's what I'm asking you, Hitesh. Did you put more money in 22 compared to 21 or less?
I don't have the exact number, but because we don't really have a budget, we don't operate like that. But we continue to be open. See, even both on the strategic and on the financial side to new opportunities. It's not as if we put brakes. If we see good opportunities, we'll go after them.
Just a couple of final questions. Give us an outlook on what's happening with Jeevan Sathi, because this freemium model is driving volumes, but it's turned loss-making, and there's quite a bit of, a competition there as well. What's the future?
Early signs are very encouraging. The freemium model is working for us. We are gaining. See, in the internet business, you need to first get users. You need to, get the network effect going, and then revenue follows. We have been very successful in acquiring new users. Our traffic share has gone up. Our user share has gone up. We're enabling many more matches than earlier. Yes, we've taken a hit on revenue, but we are not spending as much money on marketing as we were spending earlier. So in fact, our profitability may improve actually going forward if we are able to sustain this. And of course, we are working on new ways to monetize our customers and our users, but that will happen with a bit of a lag.
Okay, and just finally, before we let you go, your revenue growth has been above 50% for the 4th consecutive quarter in Q3. You think you'll maintain that trend?
See, what we are very forward-looking, so we focus on collection. So collection growth will definitely not be 50% going forward. But yes, revenue growth, because we have a lot of deferred revenue, we recognize revenue over the life of the subscription and not when we collect. That will be much higher than collection growth for at least some time.
Okay. Hitesh, thank you very much for joining us and for leaving us with a huge optimism that every sector is hiring and, other than IT, and that's extremely good news for everyone who is watching and listening to you. Thank you so much. Have a great 23.